Hey everybody, I hope everyone is doing well and had a good day. In this video, I will review the Emini 5-minute chart from Monday, June 2nd, 2025. And at the end of this video, I have a few thoughts on some goals that Al Brooks talks about that I want to touch on and remind everybody about because I think they're important to keep in mind. So the first thing let's talk about is the market leading into today. So you have the always in direction at the end of the prior day plays a role, usually carries into the open of the next day, which is today, especially if there's only a small gap. So we look at yesterday, or in this case, when I say yesterday on a Monday, I'm talking about the prior trading day. So Friday. Friday, we ended always in long. Looks like a bull trend and a pullback. And we gap down going into the day. You can think about the gap as simply one bear breakout bar. So we have a bear channel. It looks like we're testing or maybe breaking out below this channel line. So we reverse up, maybe test the trend line depending on how you draw it. And then bars 1 and 2. Bar 1's a strong bull breakout bar, but bar 2 is a fairly weak follow-through bar. And not only that, bar 2 by itself is a good-looking bull bar, but relative to bar 1, it's a very small bar, maybe a third, somewhere between a third and a quarter the size of bar 1. And that tells you momentum disappeared. Good trend bar, but then traders buy a pullback and they might be scalping out here. And then also location and context. Bear breakout, maybe from here down to the day's open. It looks like about a 50% pullback. So this bear breakout might need a second leg down. And on the open today, we got big up, big down with a stronger bear breakout and follow through. The bear follow through bar closing below the low of many bars. And then the next bar, a smaller bar, almost an inside bar. This is range compression. So range expansion here on these two bars. The range gets bigger and then suddenly a small bar. So range contraction. It's basically an implied pullback and then range expansion again here. The problem, there's a couple of problems for the bears here, and it has to do with market behavior and context in relation to support. Beginning of this rally is support. There's probably buyers below here, even though we're getting a sell-off, a pullback, another sell-off. You have to wonder, is this all a trading range? So a couple legs up, a couple legs down, rather than a new bear trend. Let's see if the bears can break out below this low and get follow through selling. Then you also have this breakout and follow through measured move down. So a couple of support levels plus the behavior. I said the gap down can be thought of as a bear breakout, or you could say it's from here, one push, pullback, second push, implied pullback, and a third push down. So third push, testing support. Really not ideal bar for the bears. Big tail and maybe closing below this low, but not closing below this measured move down and no follow through bar. So a reversal on the next bar. And the bears probably will get a second leg down, strong enough sell off for a second leg. But it depends on how you define second leg and how you count pullbacks, that kind of thing, because if you draw it this way, this might already be 1, 2, 3 pushes down, or at least 2, 1, implied pullback, 2, and then a reversal up. So now we're far below the moving average. We have a bear bar with a big tail in leg 3, and then a bull bar. It's basically a 2-bar reversal. And at this point, I said the bears will probably get a second leg down, so this is a bear flag. These bars, bull breakout, but lots of overlap, bad follow through, weak bull breakout bar, broke out but closed below its midpoint. this should be a bear flag. We should get another test down and then maybe a double bottom. But instead, we got a bull breakout and follow through above the bear flag. And this might reset the leg count. This is also a simple leg, one simple leg all the way up. There were no pullbacks along the way. So this is all leg one for the bulls. And strong enough breakout. What about this? Should the bears still get a second leg down? The new information is always the most important. So even though the bears got this sell-off that was strong enough for a second leg, the bulls responded with a reversal, a breakout of their own that needs a second leg of its own. So the bulls need a second leg first, and it's possible that we have an opening reversal. And we always have to judge the strength back and forth. The bulls and bears are always going back and forth. So a couple legs up, a couple legs down, big up. Let's see how the bears respond next. And they have a decent bar here, but the first reversal after maybe a 8-bar bull micro channel probably will be minor. And we evolved into a trading range. I call it a triangle. It's a breakout mode pattern, lots of overlap, but after a strong breakout. Also, did the bulls get their second leg yet? Is it leg one, pullback, leg two? Probably not. To me, this looks like a pullback of the pullback. So, bull breakout, pullback, strong enough bear bar for sellers above. This is also the first pullback, like I said. Simple leg, first pullback starts the channel phase or possibly a reversal. But in this case, we channeled, and the beginning of the bull channel becomes support. You have bears who start selling here, scaling in higher, maybe selling at a new high. And when the market comes back down to this price, the bears are looking to buy back shorts at their original entry. In this way, they make a profit on their higher buys, but break even on their original entry. That's the problem. One of the problems with this bear breakout here. In orange or yellow, I have buy or sell climax in a late leg. That's basically what all of these are. So, trading range breakout mode, you could also count 3 legs down, 1, pull back to new high, 2, 3 pushes. So you can see the channel line, but also a double bottom with that first pullback. Remember, traders selling here get trapped. They sell more higher, they can make a profit if they scaled in, but their original entry is at break even, and the bulls still need a second leg up. So this is an incomplete pattern. The bulls should get breakout, pullback, second leg, and this pattern basically repeated for the rest of the day. So strong bull breakout, weak reversal attempt. In other words, is this a major reversal or is it a minor reversal? And this pullback grew to about maybe 12 bars, but went more sideways than down. So the trend line break was sideways, but the bears never really broke below major lows. And what we got was a strong breakout, a pullback, or bull flag. So let me restart. Strong bull breakout, bull flag, 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 over and over. And I made this chart a little bit before the close of the day, so I do think we made it to this measured move target. But let me back up. So basically, repeating pattern here. This one could also be highlighted in green. I just don't want the chart to be too busy. But now the bulls are getting their second leg. So breakout, pullback, double bottom bull flag. Bulls get a second leg up. Strong breakout to a new high. So the bulls, in theory, the swing stops are down here. Once this bar closes, you can pull the stop to below here. Do the bears get below the major swing point? Or, in other words, if the bulls are swing trading, putting their stops below a major higher low, do the stops get run? No. We have another 1, 2, 3-legged pullback, testing a breakout point, and then we found support and rallied again to a new high. Stop can be raised here. weak buy signal bar here. So the market breaks out above, tests the channel line, finds resistance, pulls back sideways to down for a couple of legs, tests the breakout point. Tight enough bear channel, first reversal up, should be minor. Looks like it was a micro channel, so first reversal was minor. Bears got an attempt at another leg down. Bulls got a second entry long, breakout to a new high. Interesting what happened here. We broke out above the bull channel line, and you can see how resistance becomes support. So break out above, get a bar fully above this resistance, try to break below it, repeatedly fail, it becomes support. And it's fractal. Spike in channel, bull trend here, spike in channel, bull trend here. And then same problem for the bulls here. 1, 2, 3 legs up, testing the channel line. Expect a minor reversal in a test of the bottom of the third leg. This is a parabolic wedge. Parabolic wedges are minor, so you expect a minor reversal and then trend resumption. So that's what we got here. 1, 2, 3 pushes up, a test of the bottom of the third leg, and then trend resumption back up. Today was a bull reversal day. If we look at the daily chart, we have the open of the day here. We tried to sell off on the open, reversed up strongly, and then we had a spike in channel, bull trend for the rest of the day. And just to wrap up this video, there's one thing I wanted to talk about that Al Brooks shares, and he definitely talks about it in the video course, or at least the old one. I forget if he talks about it in the books, but anyway, he says there's 3 main goals for a trader, and they are in this order. 1, stop losing money. 2, make money. And 3, make a lot of money. And I feel like there's 4 goals and I'm forgetting one, but it's basically something like that. And the whole point is what I think system development, and when you actually start executing a system, the first goal you could aim for is to stop losing money. Your system should have basically safeguards to make sure nothing drastic happens. And pretty much every system needs to have an element of leg count and context. And if you can avoid selling low in a trading range, buying high in a trading range, taking leg 3, you can avoid a lot of the damage. And even that with late legs, like even here, maybe it's 3 legs up, 1, 2, 3. It's better to buy this leg 3 than to sell this leg 3. 1, pause, 2, pause, 3. Because at least here you're trading with the trend. The expectation is a minor reversal and trend resumption, but here you're trading against the overall trend, and you're taking a late leg before there's really been a significant trend line break. We're still above this major higher low. So if you sell here, the reversal against you can be major and break out to a new high. So leg count is important, but making sure you're aligned with what the market is trying to do, trading in the always in direction, I think is also really important. And having a few safeguards can help you achieve the first goal, which is stop losing money. I think if you think about your trading account as a boat, you're trying to plug a leak. And starting out, most traders lose money for a number of years before they finally get there. It's important to get there, to get to that point where you're not doing dumb things and you just stop losing money. And then from there, the goal is to make money, of course. But it's not to make a lot of money. It's to trade well, and so that you see over the course of the week and the month and 3 months and 6 months and so on, that there's more money coming into your trading account than leaving it. And of course, once we get to that point, the goal is to make that subconscious, make it automatic, and with repetition and time, we start scaling up, and we can all try to achieve our goals of making a lot of money. But I think the trading industry has that kind of negative connotation that it's a get-rich-quick scheme, and traders believe they can come into this business and after a year or two, they'll be set for life, and it just doesn't work that way. There's a step-by-step process, and I think Al lays it down clearly with step 1, stop losing money, step 2, make money, and step 3, make a lot of money. Because, and I'm guilty of this too, I think so often we want the leaves before we even get the roots. And in reality, we obviously need to build a strong foundation, get deep roots into the ground, so to speak. And then we start to see leaves, and we start growing and learning and implementing systems. And then finally, we start to see the fruits of our labor. The leaves produce fruits, and we can actually harvest. But at the end of the day, it's a cycle, and we always have to return to our roots and fundamentals and the foundation that everything is built on. And that's why trading I think that's the whole point of building systems, is to have principles to fall back on that are universal and timeless, and it doesn't really matter the market environment or the time frame or the economy. There are principles that we build our systems on that can withstand even dips in the economic sea or whatever the market has to throw at us. But that's about it for this review. So thanks everybody for watching and listening, and I hope everyone has a good night.